Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Hang Seng, on the other hand, is managing to hold on to gains of 0.2%.
I don't have to say there will be very severe consequences. Yes.
You've got to clear these resistance levels, right? The first one is 24,702, 24,640, almost unchanged to where we left off yesterday.
You know, I think China, in a sense, has reached this second or the third stage of development. India is possibly about 7 to 10 years behind.
They will be gradually reducing the NCLR, and the cost of funds may come down by 40, 50 basis points.
Those are the visuals that are coming in there from the NSC. Mr. Parth Jindal out there, Southern Jindal.
Numbers have actually come in better than at least what the street was anticipating.
At 11 o'clock, markets are pretty flat. It's got a positive tilt. The Nifty is at 24,661. Now we're seeing some choppiness in the market. We started at that 24,607 mark, saw some uptick from there, but now we've been in a range.
Well, that is the day so far. Markets are absolutely flat. I mean, there's what, 5-point change in the Nifty. We're at about 24,624. Neither here nor there. No real inclination, no real push or pull either to break out or break down as we head into this long weekend. I'm Prashant. With me, Nigel, and it's the both of us. We're going to get you the last hour of trade today and this week as well.
Well, very, very quiet trading session.
Quieter in the studio as well.
Yeah, without the girls. But the markets are absolutely quiet today. I think if you're to pick up a positive today, will have to be that the Nifty Bank at least is doing a relative outperformance.
Yeah.
And if you pull out a negative, then that's the breadth of the market isn't that great, because the Nifty, in fact, is holding mildly in the green. But the breadth of the market is in favor of number stocks declining. But I think there's something to celebrate. I'll tell you what. After 6 weeks, the Nifty is all set to, to end in the green unless something really crazy happens, because it means that the Nifty would have to correct by 300 points from here. I don't see that happening at all. So pull through the last 60 minutes, then have a good 3-day break, but keep the sound bites coming, because you'll hear plenty from Mr. Trump and our Prime Minister, Mr. Modi as well, will be talking.
Absolutely. Let's just quickly, Nigel, tell our viewers what's lined up here in the next 60 minutes or so. So gold financing companies are in focus. Muthoot is flying away. Manappuram is the other one. So we'll get you analysis on the numbers, valuations, etc. We'll also, of course, get you some sound bites, right? We had the Manappuram management, Muthoot management with us in the morning. Max Health is down about 4.5%, so numbers in focus. Ekta helps us with that. Again, the management also spoke to us earlier. GMR Airports, we'll take stock of what brokerages are saying in a bit on that company as well. That is GMR Airports coming through. So, yeah, I mean, that's the lineup here. And of course, through the course of the show, we'll get you lots of specific sound bites, etc. If anything, I mean, just looking at the price action, the market action, think about a scenario, right? I mean, tomorrow you've got this Russia-Ukraine thing, and that's the big one. I mean, the Prime Minister's speech, of course, is important as well, and we'll see if that speech basically can provide you a directional sense of what the government wants to do. It can't announce specifics, really. But the Russia-Ukraine thing has been built up to this to be this big one. But over the last 24 hours, oh wow, there is the trigger. S&P has upgraded India to a BBB, outlook stable. So that is what is coming through straight away at this point in time. And that is breaking news. One of the largest rating agencies upgrading India's sovereign rating to BBB. So that is what is coming through at this point in time. More details. I don't know if there is a press release. We'll try and, of course, get in touch with the S&P spokesperson. But that is what is coming through. Some history, etc. as well. Markets, of course, not really reacting immediately. It's absolutely flat. Maybe we will look at the rupee as well and see what's happening there. One of the things which has happened if you just look at it, right? We've had 2 rate cuts from the Reserve Bank of India. But guess what bond yields have done? Bond yields have actually moved higher. And that has primarily been on account of, government borrowing and some fear at the margin whether there is enough capacity to absorb that bond issuance from the government of India. So I think at 10:15, Lata did a discussion on this. It's an important topic. So at least in terms of bond markets, and of course for the rupee as well, I think this is important. It's important in any case with regards to ability to borrow at a cheaper rate, and of course, overall standing within sort of a plethora of nations, etc. as well. So it's an important development, important news bit which is coming through. Still waiting to hear in terms of what else is S&P saying, because usually there is a paragraph, rationale, etc., and we'll try and get that for you in just a bit from now. But Nigel, it's pretty flat for now.
Yeah, indeed. We'll have to keep an eye out. We'll try to get you a reaction, maybe try to get you S&P itself. But for the time being, the markets are extremely quiet. The Nifty has not reacted, and the rupee as well has not really reacted as we speak. In fact, the last time I checked, it was at the low point of the day. Now you're seeing a bit of a reaction, but this is definitely a positive point that's coming out there. S&P going ahead and upgrading India's ratings to BBB from BBB minus. This is a positive in the larger scheme of things. The market's now moving up a little bit. The Nifty Bank as well is gradually moving to the high point of the day. We'll get back to that. Maybe we'll try to get in an economist or the S&P. For the time being, let's get in Mitesh. Mitesh, a positive trigger coming in the last few minutes. The Nifty, though, as quiet as can be. What do you think? We're leaning towards the positive side, or do you think we want to go ahead and test the recent lows?
Nigel, I think, there's a news flow which Prashant has mentioned, but yet I think, the market hasn't given me a strong signal of an upside reversal. The only good thing is that, and I've been highlighting this since yesterday, that on the 2-hourly and the 3-hourly charts, if you look at the Nifty and the Bank Nifty, the indicators have started to turn up in the oversold area. We haven't got a crossover as yet, but that should suggest that this time, I think, in case we get to about 350-400 zones, it is unlikely to break below that, and most likely, we should at least test the upper end of the range, which on the Nifty is about 24,750, 775. And once we cross that, we should head towards 24,950, 25,000. So in that sense, the anticipatory move is on the positive side. We are just waiting for some price action to confirm that. On the stock side, Indigo is a buy with a stop below 59.40, targets of 61.30. I think that's making an all-time high, so this should be good. And Laurus Labs is a buy. Keep a stop at about 8.48. Look for targets of 8.85.
Okay. Those are individual specific names coming through. So the previous rating was BBB minus, which is I think it's the lowest investment grade. So in S&P had kept India at the lowest investment grade in terms of its ratings, and this is a significant improvement. Which has actually come through. I think May of 2024, the outlook was changed. The outlook was the rating was BBB minus, but the outlook had been upgraded from stable to positive, and now the rating itself has gone from BBB minus to BBB. So that is essentially what has come through. The nomenclature is different from for all rating agencies, but Moody's, for example, has kept us at Baa3, and with the outlook which is stable. From Moody's perspective, it is the lowest investment grade, and I think it remains unchanged since 2020. That is Moody's. If you look at the other big rating agencies, which is Fitch, Fitch, of course, is at BBB minus with the outlook which is stable as well. I think they've had their rating there for a long time as well. So that's the overall some perspective, some context to who's moved and who's not. But S&P seems to be the first big one, which is up their outlook, up their rating. The outlook moved to positive last year, May of last year, and the rating itself has been up to BBB from BBB minus at this point in time. So more on this, as I said, we'll try and get you some economist perspective as well, and of course we'll try and have the S&P spokesperson if he can. But that's some information which is coming. So I think on the rupee, Nigel, there is a bit of a move.
There is a move.
The market has also moved. The Nifty is up 16, 17 points. You can see a sharp spike up. Look at that. I think that is what we're talking about. It's a 0.25% move coming in after the move from S&P, which has come through. So that's 17 paise. And I think almost all of it has come through after the rating upgrade from S&P. So that's a pretty decent move. Yeah, Nigel.
Someone said dead economy. No?
said?
S&P. I don't know. S&P goes ahead and upgrades India. That's the response out there, So positive signal coming in there. But let's focus on stocks. We have Gaurav who's joining in to give us a quick comparison between Muthoot as well as Manappuram. Gaurav, for the day, clearly Muthoot is the big outperformer, though Manappuram has some valuation comfort. Please tell us more.
Well, yes, when we look at both the stocks, actually Muthoot actually came up with very good set of numbers, and that is the reason why we are seeing this sharp rally. In fact, when we look at the numbers, net interest income increased almost by 50%. Now operating profit increased almost by 60%, and when it comes to profit, that has increased almost by 90% on a year-on-year basis, which was higher than street's expectation. In fact, the AUM growth was at around 42%, with loan book itself growing at around 40% on a year-on-year basis, and this is despite having the largest book in terms of loan book for NBFCs in terms of gold loans. When it comes to the overall commentary, that also remained very strong. In fact, net interest margins that expanded almost by 100 basis points, and the reason being that there was 400 crores of impact. But at the same time, commentary also suggested that the gold loan book trajectory is going to stay on. When we look at the management guidance, they've given the guidance of 15%, but they have surpassed the guidance with a very big margin. In fact, they also indicated that in the next quarter, we may see guidance revision somewhere in the tune of 20%, but definitely the number of growth will remain higher than the guided range. They also said that from here on, the outlook looks very strong about gold loan, and this is basically specifically because the unsecured book, there we are seeing some kind of slowdown, so people are moving to gold loan. And at the same time, he also suggested that the finance ministry is also pushing the gold loan book. Now, this is something which is also helping Manappuram Finance today, because when we talk about numbers, Manappuram Finance did a little weak in terms of numbers for the quarter one. In fact, AUM growth was lowered almost by 1%. In gold loan specifically, we saw 20% growth, but overall the commentary was sluggish in terms of margins. But there also they had said that the gold loan book portfolio will grow at a higher pace. In FY25, we have seen the pace of around 19%. They said that in FY26, the pace will be higher. So the commentary around gold loan book is basically pushing both these stocks higher today. For Muthoot, it is more than 10%, and for Manappuram, it is more than 3%.
Okay, all right, Gaurav, thanks a lot for that. Well, let's listen into what George Alexander Muthoot, Managing Director at Muthoot Finance, had to say about their guidance and gold loan demand as well.
I don't want to change the guidance now. We've always said the 15%. Give us a little time. So usually we change the guidance after second quarter. So give us a little time. But for definitely, it will be definitely much better than what we said, 15%. There's no doubt about it. 15% plus is what I said. That is not limited to 20%. Can be even better. So we'll discuss on it after the next quarter. Anyway, I'm also here next quarter. One of the things, as I've always been said, has been good demand for gold loan because of the overhang or the difficulty in getting unsecured loans everywhere. So that is one thing. One of the important things was, again, the regulatory action which came by revised final guidelines. The final guidelines, if you ask me, has been quite good, and it is quite gold loan business friendly. When I say gold loan business friendly, it is helping the gold loan business not only for the customer but also for the NBFCs and the banks. So the regulations which came, it gave a boost to the regulatory overhang which was always there, was whether the finance ministry, whether the Reserve Bank is keen to promote the gold loan business.
All right. Well, I'll tell you what, I just want to get back before we get Deven's view on both these two stocks. Sudarshan, my colleague, is putting out some flashes on the ticker. And what S&P is mentioning is the effect of the US tariffs on the Indian economy will be manageable. And India is relatively less reliant on trade, and about 60% of its economy growth stems from domestic consumption. So they're stating the obvious, but I think that point with regard to India's story is strong, and we'll be able to combat these tariff issues that are coming out of the United States. That's giving some confidence as well. Well, we're going to be joined by an economist very, very soon, but let's get Deven's take first on these gold finance companies. Deven, I've been observing whenever there is this kind of regulatory overhang on these companies, these gold finance companies, they bounce back even more swiftly. I recall there was an issue earlier this year when you had The same stock, Muthoot, had gone down to 2,000 rupees. And from there, it's given you 30%. Valuations are not cheap, but what do you like between both these two, Muthoot or Manappuram?
So, good afternoon, Nigel. Well, I think in case of Muthoot, I think the opportunity is different versus I think what you have it in Manappuram. The one is basically having the larger footprint in form of I think diversified portfolio. The other one is pure gold focused company. In my viewpoint, I think a pure gold focused company with a long tenure gold loans is something which basically I think makes more sense. Though I think the NPA ratio is not something which I can easily comprehend. In a way, one wants to look at I think this particular business, given the strength of the gold price at this point of time, and I think given the kind of demand that one would have during the festive season, probably the tailwind is in favor of the gold finance business, and that's where probably I think market is also remaining a little bit more steady onto this particular subject. As far as we are concerned, we prefer to go with a diversified consumer finance companies, NBFC companies, the larger ones. We don't like to stay focused onto the asset class like gold pure play. I think as far as I think the investment is concerned, so the likes of Bajaj Finance would remain relatively more better choice. And if one was to go with a dedicated one, then housing finance business also I think remains a little bit more sure bet vis-a-vis the gold as far as I think the safety or downside is concerned.
No, yeah, absolutely. We'll just look at the market for a bit, 10 points, 11 points, and we'll just wait by. Devin, good afternoon. I'll just wait by till I'm told we can go across to Mr. Soumyakanti Ghosh, who's with us, who's joining us in just a bit from now. Market breadth, by the way, is pretty poor, pretty terrible. 1,700 stocks are lower and about 1,100 stocks are higher. So this is actually pretty, negative. It was not this in the morning when we actually looked at things. Things were looking much, much better. HPL Electric started lower, about 6-7%. It was down 10% by about 10:30 in the morning, and it's down 16%. So that's a pretty large cut coming through, and you've got lots of these smaller, 5-6% kind of accidents, and even larger ones, right? I think Surya Roshni is another one which is down sharply. I think we have Kanika Pasricha, Chief Economic Advisor at Union Bank, now joining us, the first voice, and we'll get you more. Ma'am, good to have you with us here. Thanks for joining us. The upgrade from S&P, what do you make of it? And immediately, in practical terms, what does this mean in terms of impact?
So, Prashant, thanks for having me. See, 3 points. First, it's a positive move, and actually it's a surprise move as well. Because recently, when we were speaking to S&P, it was not expected that the move will come in. But I would just say it is very long overdue given our own macro stability dynamics. We are still the fastest growing economy in the world. And the way we have seen improvement in inflation, fiscal, current account dynamics. So all this is playing out. S&P in its report is also mentioning, as you're also flashing it, that they have given due credence to this focus on capex by the government, overall macro stability, and that's an acknowledgement overdue, and we've finally received it. Last but not the least, is typically from market perspective. Recently, the bond market was having a lot of concerns about some fiscal slippage or need for fiscal stimulus or some sort of fiscal related issues in the coming year. But this is likely to give some relief to bond markets. We've already seen yields drop by 4 to 5 basis points. So some positive news on the cost of borrowing, cost of capital coming down as well. Thanks.
Hi, Kanika. Good to see you. Ben, has this come as a surprise, and do you expect other rating agencies also to follow suit? We'll be waiting back to hear from Moody's probably. Your take?
So Moody's typically has a very transparent framework which they work with and display in their reports as well, where they are also stuck on other issues like lower per capita income and maybe slightly higher debt to GDP compared to our EM peers. So let's see if Moody's follows through. It will be a positive acknowledgement, but overall it looks like yes, it was a surprise given we have not heard from them. We are already As I said, it's long overdue. Given for the past 2 to 3 years, typically India has seen a dramatic turnaround since COVID in current account dynamics, and of course even fiscal and inflation numbers. Thanks.
Kanika, just hold the line. We have Dr. Soumyakanti Ghosh also joining us. He's Group Chief Economic Advisor at State Bank of India. He's a part-time member of the 16th Finance Commission as well. So good to have you with us here. Your first reaction to the upgrade which has come through, sir, and what do you imagine is the impact in practical terms, sir?
No, I think that's a positive development for the economy as a whole, and you can already see that's been reflected in the cost of borrowing, the GSEC yields, the rupee. And the most important point is that it reaffirms India's commitment to the reforms which we are currently underdoing. And given the fact that I think this last outlook, I think it is coming more than a decade. The S&P outlook, upgrading India is coming more than a decade. I think it's a very positive development. And one of the interesting points which the S&P has mentioned in the press release, which I can gather from the press release we have been putting out, is that it has also talked about the monetary and the fiscal policy coordination. So I think since the pandemic, this policy coordination has been demonstrated in full gusto, and my sense that it's a positive development of the economy amidst all the uncertainty which we have been facing in the last couple of months.
And for the upgrade to come at a moment, particularly like we find ourselves in now, right? Which is, a little bit of the US-India thing which is going on, and whether, there have been some talk whether this is going to...
I think that this upgrade actually could, I don't know, this is possibly could point up to some thaw also in the India-US trade deal, which could actually, which may materialize. It seems that there is a possibility of it materializing maybe in the next 1 or 2 months. So the sense is that there has been policy continuity, there has been fiscal coordination, inflation has been under control, robust and governed fiscal deficit. If you remember, the center has brought it down to 4.4% from 9.2% in a span of 4 years. And the state's consolidated fiscal deficit is also around 3% because that's a rule, because they can't borrow more than 3% of GDP. And overall consolidated fiscal deficit has also been steadily declining. My sense is that if the things continue like this, I think it will be good for the economy and it will be good for the debt market and the bond market as well.
I think Moody's, Dr. Ghosh, has also got us at the lowest investment grade, like S&P was before this upgrade. Would you expect others, Fitch, for example, is at a stable outlook and a different nomenclature in terms of the ratings. Would you expect others to follow? Typically, should we expect when one large rating agency moves, others sort of look at their own assessments?
Yeah, I think others would follow, but I am glad that S&P, I think, was the one the rating agency which was actually has pushed the rating upgrade to the, has done this rating upgrade after more than a decade. So from that point of view, I think it's a very positive development. And even if other agencies follow, I think that will be good for all of us. But in terms of the overall rating, I think S&P upgrading India is a very big news for Indian economy as such.
I was saying earlier, Dr. Ghosh, that we've had rate cuts, but bond yields here have moved higher. There have been some concern at the margin whether, government borrowing is going to be, is there going to be any issue at the margin with regards to financing that? I think in terms of government borrowing, bond yields, etc., this perhaps helps in a sustainable way, this upgrade and more if they follow?
Yeah, I think that's a very interesting question, Prashant. My point is that I think ultimately a rating agency has to convince the Indian markets that Indian public finance is actually in quite a good shape. And I don't see any reason why the debt markets, the bond yields have actually reacted so unfavorably after the monetary policy announcement. Maybe it was a market reaction or maybe it was an irrational exuberance or whatever you can call it. But my sense is that after this S&P call and with an international rating agency ascribing that India's fiscal position and monetary position continues to be sound and favorable, the debt market already has taken a cue from that development and the yields are down. So that is, I think, one of the another positive developments for the economy as such. Because if the cost of borrowing declines in the international market also, that will be also a positive for the market.
Okay, all right. Thanks a lot for joining in, Mr. Ghosh, as well as Kanika, and giving us your take. So, initially we didn't see a big reaction, but now as you look at the intraday chart on the rupee, you'll see the rupee has pulled back a little bit. The yields have softened by around 4 to around 5 basis points. And the Indian stock market itself has suddenly come back to life. We're up close to around 35 to around 40 points after being mildly negative. So the rupee pulls back. The yields as well have cooled off a little bit, and the Indian market spiked to the high point, towards the high point of the day as we speak, and we have an expiry that's playing out. So getting this sort of a news point on weekly expiry could sometimes lead to an outsized reaction. So let's see whether or not those call writers, they suddenly get stumped on the wrong side, because they would be bracing for not a very, very big move, and suddenly you have the Nifty that's moving up. I think around the 24,675 to around 24,700, going by the options data. That's where the bears are looking to defend for today. Let's go back to Deven Chokshi. Deven, good news definitely that's coming in there. S&P going ahead and detailing that India is growing well. The consumption story is something that we should be focusing on domestically, and we'll be able to, bear up or withstand any kind of impact of these tariffs. So heartening to hear those words. Your take, any stocks that you've seen today that you would like to talk to us about or recommend it? Because it's the final day of earnings. It hasn't been so bad, actually. Expecting a weakish performance in the first quarter. In the last few days, you've got some earnings surprises, actually. One stock is Asian Paints. It's now moved to the high point of the day. That was a pleasant surprise as well. What's your take?
Yeah, Nigel, I think indeed, it's a very positive news going forward. And at the same time, I think the commentary coming in from RBI, I think on the lowest rise in inflation, I think they are saying that I think India will now probably focus more on the growth vis-a-vis the inflation. Now, this is extremely positive commentary. That means that I think the regulator is trying to pitch in, and I think put across, I think the growth-oriented policies for the banks. So which promises that I think going forward, you're likely to see the activity increases, I think, as far as the economy and the companies are concerned therein. Overall, I think the first quarter result season is over. And my take is that I think based on various commentaries that we have heard from different companies, my take is that in these subsequent quarters, we are seeing a robust demand scenario emerging. Consumer demand from rural space, I think, is actually, I think, growing better. At the same time, I think cost controls are, I think, quite some in the entire universe in different companies, of course, which also promises better profitability along with the growth in the current financial year. So I think some of the immediate ones who could possibly be the beneficiary immediately, autos, I think in particular, would remain relatively more short bet as I see it. The likes of Maruti's, likes of Tata Motors, and for that matter, Mahindra and Mahindra, they remain, I think, relatively more focused stocks as far as the investment outlook is concerned from them. I also believe that I think some of the real estate companies could possibly see relatively larger amount of uptake as far as I think the constructed premises are concerned in subsequent quarters. So we remain distinctly bullish about the discretionary spending in the economy, and probably believe that I think lower cost regime is definitely helping the economy more at this point of time.
Got it. Okay, all right, Deven, it's good to have you on the show as always. Thanks a lot for joining in. It's been a good afternoon, actually, with this kind of pleasant news flow that's coming from the S&P. Wishing you a good weekend ahead, Deven. We chat up in the next week itself. Well, slip into a short break. Continue our focus on markets. We'll have Tushar Pradhan as well, who will be joining in.
Okay, welcome back. Markets up 26, 27 points. It's kind of flattish. Market breadth is a little poor, although both have picked up since that S&P upgrade news came. Tushar Pradhan is with us, Director, Hexagon Partners. Tushar, good to have you with us here. Thanks for joining us. You know, gold is the name of the game. Gold finance, gold jewelry. Look at Senco. Senco is up 7-8% today. Of course, there's Kalyan, which is up about 4%. Muthoot Manappuram are up 10 and 4-5% respectively. So, you know, prices are going up. Lending is pretty robust. Anything you like in the space?
I think this is part of the overall consumption theme that we keep speaking about. And essentially, when we talk about this 6.5% GDP growth, domestic led, I think one of these sectors, such as gold, etc., are very central to the entire theme. So I think that's playing out. But you have to also remember that all of these stocks have been at much higher levels before they have come to this level now. So we've seen a fair bit of volatility as well. I think from a gold financing business, I think clearly they are in a better position because their net asset values go up while they may have lent a lower amount, which means that the scope for them to lend more without actually prospecting for more clients is very much the case, which means their ability to lend is much higher because of sheerly the cost of the collateral going up. So I think these are all vectors which are pretty positive. But as I said, it's one of the themes that we look at, not something really the main theme at this time.
Tushar, but how do you approach the markets right now? Because there is that caution out there. Domestic data points are still rather soft. Hopefully this upgrade that we've got from S&P, that can help sentiment a little bit. And we are just seeing the money market react, which is telling you that this is quite a big positive. Your take though, Trump's tariffs will keep things uncertain. The hope is the economy recovers in the next 45 days. You believe it will be as much as expected?
No, in fact, I've been bullish for the entire economy for a while now. In fact, I've been a little disappointed with the first quarter results. But I think that there will be catch up, especially if you remember September quarter of last year was particularly bad across a large swath of Indian companies. So when the second quarter numbers post September into October is when we'll see them. They come out. I think we are in for pretty significant surprises on the upside. That's one of the things I continue to believe in. Second is about this S&P upgrade. I think most of these rating agencies have been far behind the curve when it comes to country ratings. And we've been there before, so it's no surprise. But the downgrade by Moody's in the US, for example, which has come after 1 decade after the downgrade from S&P. I mean, it just tells you that, there is not so much of a consensus in terms of, where the direction is, and it takes so long to be able to kind of decide. If you look at the economics, if you look at what is it that decides the rating of any country, I think India has been far ahead of some of the other countries which have much higher rating. So, it defies logic to me. But when you look at it overall, I think after such a long time, if they have acknowledged an increase in the fundamentals of the country, I think that's a very strong positive. And I think it comes at a very interesting time because we've got local inflation, which is lower. We've got a central bank which is fairly positive on growth and allowing for interest rates to slide down. And this, kind of bolsters the case for lower rates. And that is essentially going to be dramatically positive for the economy because we are still on a growth path. We are talking about 6.5% real GDP growth. So it makes for a very interesting time. I think, yes, the Trump situation will keep it volatile, but maybe that's a good news because then you enter at a time when all the positives are not in the price.
No, I got that. The point of rating agencies, I completely take on board. But it is what it is, right? Somehow they matter. I guess the downgrade matters more, right? I mean, more than the upgrade.
Yes, I mean, come to think of it, but you saw the impact of the US sovereign downgrade. It had absolutely no impact on their stock markets. So would you think there are two roads one takes? But yes, for countries which are at the margin, so whether it's a triple B and a triple B minus, a downgrade really hurts a lot. Yes, I think you're right on that.
Yeah. Point taken. Any other ideas, any other themes from a market perspective, Tushar, you focused on?
So I think one of the areas which we have ignored for some time and for various reasons and for, I think, logical reasons as well, is the private lending space, both in the banks as well as the NBFCs. So one of the reasons why we feel confident about is that the quality of book going forward, because of some of the challenges that we faced in the NBFCs lending to microfinance, etc., they seem to have had a cloud over these valuations for some time. And I think they have a reasonably sized book. They have a significant growth path ahead of it, which means the assets will grow, which in effect means that net interest margins are likely to be pretty strong going forward. And if the economy grows, then every part of the economy, including the MSMEs, the small and medium enterprises, they all grow. And I think these are the companies which are right in the path of being prudent, of course. I'm not saying all of them will do well, but if you're a prudent lender to this growing area, I think a year or two will provide us with some great opportunities. So that's one area that we at least at Hexagon look at very positively. The second is capital goods. That's again an area which has kind of come under the cloud because of a softening of ordering, the kind of revenue recognition that we see in the last couple of quarters. It's come off a little bit, and the prices also have come off. But I think if you're talking and believing in the 6.5% GDP growth rate, then I think these things have to do a lot better. In fact, most of these capital good companies are now trading at below their average PEs that we've seen in the last 5 years. So these are the two areas very strongly that we look at from a positive upside perspective.
Okay, all right. Tushar, what we'll do is we'll leave it there. Thank you very much for joining us. Appreciate your time here on CNBC-TV18. Have a good weekend and happy Independence Day to you and your team. Well, time for our segment, D Street Chatter. Nimesh has been working the phones to get us a sense of what he's picking up across dealing rooms. Nimesh, take it away.
Hi, Prashant. So, a bit of softness ahead of the big truncated week. So, that's something to watch out for. We had one good news in terms of the S&P upgrade today. I guess all eyes will be on the US Russia meet, and that could potentially have a big impact of a short covering to a rally as well for the Indian market. So that is something Citi is anticipating and hoping for. So let's see if that comes on Monday morning or not. From a flow perspective, for the second day running, I understand there is buying interest in technology stocks. So again, the IT index is up another 0.5%, and there is delivery buying happening in a lot of the IT names today. So that stands out for me. Technically, 24,350 is a level to watch on the downside. If that gets taken out, you will see a very sharp fall from there on. So that's the level to watch out. And on the upside, 24,950 is a big level to watch as a resistance. So in that range for many weeks now, need to break out on the either side. But I guess all eyes will be on the meet this weekend and potentially hoping for a short covering rally on Monday morning.
Okay, all right. Got that, Nimesh. What about individual stocks? What are you picking up?
So the first stock on my list is Autumn. Again, there was a sharp intraday dip and an equally sharp recovery as well. There was a large block. Nearly 50 lakh shares got changed hands. And I understand the promoter native was a seller and some large FI investors were buyers in today's block. So again, disclosures could be quite interesting in Autumn. So that's the first stock. Second stock is Mastech. Well, the stock has been consolidating post earnings. I understand there could be a large block in Mastech very soon. So that's the second name. The third name is SPML Infra. The stock is under pressure today, but the sense is there could be some large order wins for the company very soon. So that's the buzz there. And the last is Patanjali. That's interesting. It's been pretty much on the sidelines, sideways for the last many weeks now, consolidating a very narrow range. But now there could be some trigger of potential new hirings. So that is something to track as far as Patanjali is concerned.
New hiring. That's an interesting one, Nimesh. Usually you will have more on it. It's a very cryptic clue. But basically a senior person joining. Is that what?
That's the buzz that maybe you will see some not one but maybe one or two more senior people joining in Patanjali. So that's the buzz there. So need to see who comes in. A couple of names have been speculated, but nothing official yet. So I leave it there that maybe you will see some big hirings there.
Okay, all right. That's Patanjali for you. There's Mastech and there's one more. So yeah, I mean today's the list with regards to individual names to keep an eye out on. Mitesh is with us with what to buy or sell today for a reverse trade when we come back on Monday. Mitesh, what do you have?
On the short side, we'll take some long positions despite being a weekend which is extended. APL Apollo, after a big decline, was showing first signs of a reversal. BTSC here, the stop at 1595. Look for target of around 1620, 1625, set to bring more. And the other stock which I like is Blue Star. It had a breakout on early in the day and then gave a pullback for the last 1 hour. Just picking up again. So keep a stop just below levels of 1775 for targets of 18.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's slip into a short break. On the other side, we'll put the focus on some stocks that are moving around. Max Health as well as GMR Airport. Stay tuned.
Okay, welcome back. There's 18 minutes to go for the market closing. Market is up 14 points, not very much at all coming through. Let's quickly get a quick sense on the F&O space. Nigel has walked across to the F&O desk. Nigel, take it away.
Well, unlike what we've seen the last few trading sessions, the good news today is the Nifty Bank has found its form, and that's up close to around 200 points. That always helps the Nifty scores, though you have a couple of large weights that are not participating. So because of the Nifty Bank's outperformance, it explains that the Nifty is holding in the green as well. Now, it's very, very interesting because the next 25 minutes, you'll have this weekly expiry that will expire. And there will be a couple of strikes that are very, very active. So the positioning is such that we don't get past the 24,700 mark. Why is that? 24,650 call. The premium out there has come down drastically. It's almost at zilch right now. At the start of today, it was around 60 rupees. So those call writers, they are factoring in that the 24,700 odd mark does hold out. On the downside as well, it appears right now that the 24,575 level will hold out because the premium on that strike, that's the 24,600 put, that at the start of today was close to around 40 rupees. That's totally got eaten into. So both those two. So as of now, it appears that we won't breach this 24,575 mark on the downside, and on the upside, 24,700 mark. Stocks that are in focus, well, Indus Stars. That's one stock that has come in for some kind of unwinding of positions in today's trading session. The stock as well was lower the last time I checked. But a couple of names like Infosys, good open interest built up, stock still holding with a gain of around 1%. And after many weeks, we are seeing that the Nifty IT index, in fact, has outperformed what the Nifty has done this week. And one of the stocks contributing to those gains is Infosys, which has seen a good amount of long addition. Eternal's the other one out there that's holding strong. Remember, 3 months or so ago, you had $1 billion of selling coming in from FIs because of the rejig. From there, there's been good amount of open interest build up. Today as well, the stock is holding strong, and there's massive build up on the open interest side, telling you there's long addition on that one. And finally, PNB Housing Finance, there is some skimming down of positions on the on the option side. I think it has a little bit more to go, but it's very, very close to exiting the F&O ban. As we speak, around 81% of the MWPL is the open interest as a percentage of MWPL is 81%. If it breaches 80% on the downside, that's when the stock comes out of the F&O ban. So there is some shedding, but I think it has to do a little bit more work, maybe another 50,000 shares or thereabouts. Back to you.
All right, Nigel, thanks very much for that quick snapshot view on the F&O side. Max is the one we want to focus on now. Steady performance. Stock, though, is, I think, seeing a bit of a dip. Ekta is here with details. Ekta.
Well, yes, Max Healthcare is under pressure in today's trading session on the back of the margins, which came in lower than what the street had anticipated. Now, the reason why the margins were pressured is because the company's added 2 hospitals in the past 1 year. One in Dwarka, and they acquired JP hospitals last year as well. So these 2 new hospitals are operating in their first year, and the margins are at around 12.5%. So the company did indicate to us that the new hospitals have pressured margins as they are just in the first year of operations. They expect the new hospitals margins to ramp up to the existing hospitals levels soon enough. Now, in terms of the other segments of the business, such as the international revenue, they have grown over 30% this quarter and have indicated that they have in the past been growing at around 25 to 30%, and they expect to continue growing at those similar levels. Max Labs and Max Home, both those segments which the company runs, have been growing consistently as per the company. And for Max Labs, they do expect the margins to probably improve to around 17 to eventually 20% odd levels. They are interested in acquisitions, but as and when the opportunity arises. Possibly the key spanner in the works for the company this time is the 2 new hospitals with their margins possibly pressuring margins on a blended basis.
Absolutely. Ekta, thanks very much for that. Abhay Sohi is Chairman Managing Director at Max. We spoke with him. Just listen in.
In the last year alone, we've added 2 hospitals. One is Dwarka, which was a greenfield project, and which we commissioned in July. And we acquired JP Hospital in Noida. This was in October, November. So this is what I categorize as newer hospitals. So if I see existing hospitals, then you had an increase in EBITDA per bed. You had of about 7%. You had an increase in ARPOB of about 5%. There's been an expansion of margins as well from 25.8 to 26.2. But the 2 new existing hospitals are operating presently in the first year at about 12.5% EBITDA margins. And, they've sort of, as expected, would drag the overall ARPOB down, at least in the first couple of quarters. And as these ramp up, and that's exactly where the opportunity is, both the margins as well as profitability will expand from here on.
Let's hop across to Vivek. He's here to tell us about a Kotak note that's come in on GMR Airport. Vivek?
Well, that's right. A very interesting development as far as GMR Airports is concerned. So the company has gone ahead and refinanced 20% of the consolidated net debt, and this has happened at significantly lower rates. So the company has gone ahead and raised close to 5,900 crore. This is via the NCD route, and this is at a coupon rate of 10.225 to 10.425. Now, this is for a period of 18 to 36 months. The current rate at which the NCDs were being serviced was at close to 14%. So again, significant savings coming in, and what has actually prompted and aided the much lower interest rates, number one is the fact that there have been ratings upgrades that had come in, especially post the tariff revisions. So CRISIL has gone ahead and given an A+ rating as far as GMR Airport is concerned. Now, Kotak Institutional Equity says that this particular move paves the way for much higher value as well as valuations of GAL, that is GMR Airports, and also says that this enables a faster move towards adding assets and thus higher reinvestment value. So now the fair value as per Kotak increases from 101 to 104 rupees a share. Along with that, they are saying that the EBITDA run rate per quarter of GMR Airports has already reached close to 1,000 crore rupees. It came to 1,000 crore rupees in Q1. They see there are prospects of EBITDA actually increasing to 1,400 to 1,500 crore with the addition of the Delhi duty-free operations as well. They are saying they wouldn't be surprised if they see another 100 basis points reduction in interest costs a year from now on. So along with it, they're also saying that there is a possibility of another ratings upgrade that has come in as far as GMR Airports is concerned. On the back of the balance sheet strengthening, Kotak is quite positive as far as GMR Airports is concerned.
All right, Vivek, thank you very much for that. 91 on GMR as things stand right now. Amrish Baliga is with us. Amrish, good afternoon. Good to have you on the program as always. Let's just start with what you like. Uno Minda is the one stock that you've got your eyes on.
Exactly. And this is a global tier 1 manufacturer and supplier of automotive components and systems. Our product portfolio is across 25 categories, mainly automotive switches, lighting, castings, seat and acoustic. And the new segment they have got into is EV-specific products, sensors, controllers, ADAS, and blow molding products. Catering mainly to two-wheelers and passenger car segment, but now they've also shifted focus to CVs, three-wheelers, as well as off-road segment. Mainly supplying to OEMs, but the replacement market also is growing quite fast. Globally, about 75 manufacturing facilities, around 37 R&D centers. The Q1 numbers were better than expected. EBITDA margin was about 12.1%. And growth is actually seen in aftermarket, and they've also benefited from premiumization and increase in content per vehicle. So next 3 years, I'm expecting a revenue CAGR 27 is about. And with this, my medium-term target, so is the next 4 to 6 months target is about 1265.
Where is it trading at? Valuation, Amrish? Sorry, missed that.
See, the expected EPS is around 23. So my target price, like I said, is 1265.
Okay, all right. Amrish, request you to stay with us. Before we slip into that break, just want to pull up one stock, Hindware Homes. Just pull up, that way it's a massive move is what we're seeing on that particular stock. It's up close to around 13%. So big move on that counter as well. Well, for the time being, slip in a short break. Come back. We'll continue a conversation with Amrish. We'll also get, cracking in terms of the market. Stay with us. Welcome back. Well, Amrish Baliga is still with us. Amrish, what's the view on hotel companies? Because the first quarter was a little bit softish, but every management that's coming on from Mr. Chatwal to the smaller names as well, everyone's saying their occupancy is up, ARs are moving up, and if you go anywhere for this weekend itself, it's totally chock-a-block. Do you think hotels, the best is yet to come?
I think so, because what we are seeing is average room rents, have been going up and they have stayed up. Because in the past, we have normally seen those spikes and then they would come down. But since the last 2 to 3 years, we have been seeing that the average room rents are continuing to move up, and they are in fact consolidating. And again, looking at the number of new rooms or new keys which will be coming into the market over the next at least 1.5 to 2 years, I don't see a huge supply which will actually push these rates down. So I think at least for the next 1.5 to 2 years, I see the margins improving for most of the better brands. So I think it's still time to buy and hold.
Okay, all right. What is your view on these gold finance companies? Because, if MFI loans as well are going to be in pain, the one secured lending that you're looking at is gold finance companies.
Absolutely.
And Muthoot's numbers are blockbuster.
Right.
Manappuram has got a revamp happening. So, between the two, what would you go for? The bigger one, the one that's enjoying good valuations, or the turnaround story? Or do you find some other way of playing it? I don't know, Fedfina, or maybe IFL, or a couple of other names, CSB that comes to mind that has some gold portfolio?
I think, the companies, the NBFCs or banks which have a decent gold portfolio but haven't really got the valuations, like the pure gold finance companies have got. So I think one should be looking at such companies. So something like a Fedfina surely should be looked at, because again, we have not seen a great performance, at least the stock performance from this NBFC. So I think one should be looking at stocks like those, because that's what I think will play out, at least going ahead. And I've been maintaining that possibly we could see pain in the retail side of lending, but when it comes to gold loans, it's secured. So from that point of view, I think it's much better than a pure retail lending portfolio.
Yeah. Do you track HBL, Amrish?
I don't track it very closely, but yes, I think the earnings were extremely good. So I think that's what is showing up.
Yeah, lots of segments, right? I think batteries, there's some defense component, industrials, electronics.
Absolutely.
Yeah,
but like I said, I've not tracked it very closely, so I really can't.
JM Financial is the other big winner. Anything here, Amrish? This week?
JM Financial, I believe it can move up some more from here, but already we've seen a decent performance. So I think the upside could be limited to about 18-20% from here.
PG Electroplast was the big casualty, 17% down this week.
Yeah, but I think this is again an opportunity after the sort of a correction which you have seen. Yes, the valuations were high, but after the sort of a correction which you have seen, I think at these levels, the worst seems to be built in. I think the downside could be about 5 to 8%. If someone can take that risk, I think it's a good time to start buying.
Okay, all right, Amrish, thanks a lot for joining in and giving us your take on the markets. Have a good evening and a rocking weekend ahead as well, a long weekend. Well, time to wind down the markets then. It was that sort of a day when the Nifty went home as flat as can be with a mild positive bias. The good news was the Nifty Bank found its form in today's trade. The mid-cap index, though, was a relative underperformer with a lot of stocks actually ending in the red, and the number of stocks declining were more than the number of stocks advancing. Let's tell you about some of the top winners, though. Anthem Biosciences, stock up 8%. Good move out there. Muthoot Finance, brilliant set of numbers. There's all probability there's going to be a AUM guidance revision at the end of quarter 2. The management hinted that to us. Stock goes home with gain of around 10%. Everest Kanto, stock up 14%. Rico Auto, stock up 12%. Big move out there. Bajaj Housing Finance as well. A lot of action yesterday in the SLBM market. Today, the stock was up close to around 4%. Manappuram as well, their numbers weren't that great, but today it participated on the upside. So good move out there. On the flip side, you had Yatra that came in for some profit taking after seeing a 45% rally in